Hey traders, Jeff with Simply Derivative, and here's the daily recap video for today. It is December 13th, Thursday. Taking a look here at the E-mini S&P 500 futures contract. Got a lot going on in this chart. We're looking at a 5-minute of the regular trading hours, meaning from U.S. open to U.S. close, 6:30 a.m. Pacific to 1:15 p.m. Pacific. And we got a bunch of things highlighted on here. A few things that I want to point out for some trading opportunities. We've had some members and people in the community asking for a little more detail in some of the opportunities that we're taking a look at and that we execute on a daily basis. Just giving you some more insight into how we view the markets using technical analysis with price action, candlestick formation, location of candlesticks, what they look like, what that means in terms of underlying psychology of the market, and really how to read that information to make your decisions. We're using technical analysis to make our decisions of when to buy, when to sell, when to get out, when to stay out, and there's so much that goes into it. And so I wanted to just highlight a few things that we looked at, that we do look at on a consistent basis, and that we use today specifically for our trading on this Thursday. So you can see with this dotted line, this was the open, first 5 minutes of the open here on the ES, and we had gapped up from yesterday's close down here at this basically 2650 area. We opened up, we came up into this area with some wicks up here in this 2667 area, and you can see these wicks with blue circles highlighted, basically pointing to this area, in this area, with one attempt above this 2670 that we identified as an area where we could possibly see some selling pressure. And so this, going back to yesterday, you can see a couple of attempts at this level or in this level, and then the market reversed out of there. We started the day's session moving up towards that area, couldn't get in there, and then pulled back and closed this gap from yesterday's close. And so this was a gap fill during the regular trading hours. You can see that price put in a basically a doji candle and then reversed out of this area to fill the gap. And we finally got back up into this area above 2670. And these little circles are here because I wanted to highlight the wicks that are pointing up to this area where we expected some selling pressure to come in. It didn't get in there this morning. It couldn't get in there into this area above this price on a second attempt yesterday, late afternoon, and only got in there once and reversed out of there. So what is the point of that? Well, this is basically telling us that there is some selling pressure. There are sellers that will come in and push the market down. And that's exactly what we got. After the gap fill closed, we had a big impulse move up with a further move up, taking out the regular trading hours high for the day up at 69. We took that out. Price got back up into that level where it reversed out of yesterday, put in a bearish candle, and you can see the rest really is history. The market continued to move down, took out the gap, and proceeded to get back to the prior day's gap area. So we got two gap fills on the regular trading hours just out of today's session off of this reversal move from 2670. Now there were a couple of other opportunities throughout the day that you could have taken advantage of, but really what we were focused on was the short up here with some longs at the gap fill area, and you can see that took place at this 2655 area and then at that 2640 area a couple times. We still haven't violated that low of 2636, but this trend line break just going into the close today may mean we're possibly headed back down there and even lower to close out the week. But we'll talk about that in the pre-market prep tomorrow for Friday. Just wanted to, like I said, go in a little more detail about some of the trading opportunities that we look at and what information and really how we view the markets. I know some people had been asking, so hopefully that helps, explains it a little bit better in terms of what we're looking at and why we're looking at it, and the opportunities that it presents itself on a daily basis, especially here in the E-minis with the volatility so high as of late, both realized and implied volatility being high. The realized is good because we're getting price movement. We're getting good swings in the market, giving us ample opportunity throughout the day. So, like I said, hopefully that helps. If you guys want to trade alongside of us, learn how we do this, learn to read technical analysis on the charts and make better trading decisions, check us out at simplyderivative.com. Be sure to subscribe to our YouTube channel and follow us on social media. We'll see you in the morning for the pre-market prep, and tomorrow's trading will wrap up the week as well. Have a good night, guys.